Hi, I'm Dave Copy, president of Mid-Market Capital. We're a technology-focused merger and acquisitions firm. I'm also the editor of the Exit Strategist newsletter. If you're the owner of a technology company and want to sell for strategic value, it's very important for you to be able to move the buyers off their initial default position, which is a multiple of EBITDA or cash flow, to a much higher value. If you want to sell for strategic value, you first need to create a great company. And secondly, in your sale process, you need to capture and articulate that value in a professionally managed and competitive M&A process. We are creating a series of videos in which we describe our 7 top strategies to help our clients maximize their selling value. This one we like to call the time to market delay. When you look at a large company buying a smaller tech company, they usually could develop the technology themselves or write the code themselves, but we ask them to consider the time lapse for them to develop that technology themselves. What can happen in that intervening period? Could they lose first mover advantage, or worse yet, could they have customer defections? We had one buyer that was losing a lot of customers because they had bought 5 different software companies and were maintaining 5 disparate platforms to deliver essentially the same functionality. They had been promising upgrades but had not delivered for years. Their clients were beginning to walk out the door. We had convinced them that they could pay for our client less than the amount they were losing in customer defections annually. We suggested they make the acquisition, announce to their clients they had an upgrade path, announce a withdrawal of support for 4 or 5 of those platforms, and stop those defections. Well, the acquisition was completed, and sure enough, the defections stopped. Now, those clients didn't immediately upgrade, but they didn't leave either. We like to convince buyers to look at our clients from a purchase price perspective on what the potential value they could create owning those assets post-acquisition, rather than looking at it as a narrow multiple of the EBITDA and not creating any strategic value for our client. As psychologists will tell you, often risk aversion is a more powerful motivator than the opportunity for gain. We were able to position our client to help avert risk and avert those customer defections, which created a sense of urgency and a much higher value from the buyer. Mid-Market Capital helps owners optimize their value. Please give us a call. We'd love to hear your story.